Hello everyone, welcome back to our channel. Today, we're going to delve into the future of one of the world's largest financial services companies, Berkshire Hathaway. With the recent passing of Vice Chairman Charlie Munger, there have been many questions about the company's future. Let's dive in. Berkshire Hathaway is an American multinational conglomerate holding company based in Omaha, Nebraska. It was founded in 1839 as a textile manufacturer and underwent a drastic restructuring into a conglomerate starting in 1965 under the leadership of Chairman and CEO Warren Buffett and Vice Chairman Charlie Munger. The company's main business and source of capital is insurance, from which it invests the float, the retained premiums, in a broad portfolio of subsidiaries, equity positions, and other securities. Berkshire Hathaway's business and investment model is focused on acquiring and managing businesses across multiple industries. It has full acquisition of companies like Geico, Dairy Queen, and BNSF Railway, and controlling majority interest in companies such as Kraft Heinz, Coca-Cola, and American Express. Berkshire Hathaway is renowned for serving as an investment conduit for Buffett and Munger. The company's book value has grown at an average rate of 20%, compared to about 10% from the S&P 500 index with dividends included over the same period, while employing large amounts of capital and minimal debt. As of 2023, Berkshire Hathaway is one of the top 10 largest corporations, measured by market cap, in the United States. Its Class A shares have the highest per-share price of any public company in the world, reaching $500,000 in March 2022. The company owns dozens of companies across various sectors and industries, including insurance, utilities, energy, transportation, manufacturing, and retail. It also holds significant investments in leading companies such as Apple, Bank of America, and Coca-Cola. Despite the recent passing of Charlie Munger in November 2023, Berkshire Hathaway continues to be a powerhouse in the global finance sector. If you found this video helpful, make sure to like and subscribe. Charlie Munger, the renowned investment guru and vice chairman of Berkshire Hathaway, passed away at the age of 99. His legacy in the world of finance is profound and far-reaching. Born in Omaha on January 1, 1924, Munger enlisted in the Army Air Corps in 1943, eventually studying meteorology at the California Institute of Technology. He graduated magna cum laude from Harvard Law School in 1948. Despite not completing his undergraduate degree, Munger became a successful real estate lawyer and founded the law firm Munger, Tolles & Olson in 1962. Munger's career at Berkshire Hathaway began in 1978 when he became vice chairman. His influence on Warren Buffett's investment style was significant. He shifted Buffett's focus from investing in troubled companies at low prices to focusing on higher quality but underpriced businesses. This shift in strategy was evident in 1972 when Munger persuaded Buffett to approve Berkshire's acquisition of See's Candies for $25 million, a move that has since yielded over $2 billion in sales for Berkshire. Munger's philosophy emphasized the Lollapalooza effect, where various factors converge to influence investment psychology. His teachings resonate as a beacon of rationality, prudence, and a commitment to lifelong learning. Beyond his contributions to Berkshire Hathaway in the world of finance, Munger was also a philanthropist, donating substantial amounts to educational institutions, including the University of Michigan, Stanford University, and Harvard Law School. Charlie Munger's legacy extends beyond the balance sheets and stock portfolios. It is etched in the principles of value, prudence, and long-term thinking that have become synonymous with his name. The impact of his ideas will continue to shape the way investors and entrepreneurs approach their craft for generations to come. Berkshire Hathaway's leadership transition has been a topic of interest for many years. The company's CEO, Warren Buffett, and Vice Chairman, Charlie Munger, have been the faces of Berkshire Hathaway for decades. Their investment acumen and business savvy have been instrumental in the company's success. However, with the passing of Charlie Munger and Warren Buffett now in his 90s, the question of succession has become more pertinent. Buffett has always been transparent about the company's succession plans. In his annual letter to shareholders in 2020, he assured them that Berkshire Hathaway is 100% prepared for our departure. In May 2021, Buffett confirmed that Vice Chairman Greg Abel would succeed him as CEO. Abel, who currently oversees all of Berkshire's non-insurance companies, is well-versed in the company's operations and investment philosophy. Buffett expressed confidence in Abel's abilities, stating that, "If something were to happen to me tonight, it would be Greg who'd take over tomorrow morning. If for some reason Abel is unable to assume the role, another vice chairman, Ajit Jain, who oversees Berkshire's retail and reinsurance businesses, would become CEO. This succession plan ensures that Berkshire Hathaway's leadership transition will be smooth and that the company's investment strategy and business operations will continue to thrive. While the transition marks the end of an era, it also ushers in a new one. With Abel at the helm, Berkshire Hathaway is poised to continue its legacy of value creation and prudent investment. The future of Berkshire Hathaway looks promising, and it will be interesting to see how the company evolves under its new leadership. Berkshire Hathaway's investment strategy is a reflection of the principles of its leaders, Warren Buffett and Charlie Munger. Known for their value investing philosophy, they have built Berkshire Hathaway into a financial powerhouse by investing in companies that exhibit solid fundamentals, strong earnings power, and the potential for continued growth. The company follows a buy and hold strategy, where it acquires businesses and investments with the intention of holding them indefinitely. This approach allows compounding returns to work their magic and aligns with Berkshire Hathaway's mission to provide long-term value to its shareholders. Berkshire Hathaway's portfolio is a mix of wholly owned businesses and significant stakes in leading companies. The company's operational philosophy is to buy established yet undervalued businesses and maintain significant stakes in leading companies. This has proven successful over the decades, reflecting the renowned value investing philosophy and solidifying Berkshire Hathaway's position as an iconic American conglomerate. Buffett's extreme long-term bias is part of what makes him an excellent investor. It's an edge few other investors have the patience or temperament for. In the 58 calendar years from 1965 to 2022, Berkshire Hathaway stock appreciated at a 19.8% compound annual growth rate, compared with a 9.9% annualized return for the S&P 500. This amounted to a 3,787,464% return for Berkshire shareholders, compared with a 24,708% return for investors in the S&P 500. Buffett restricts his investments to businesses he can easily analyze. If a company's operational philosophy is ambiguous, it's difficult to reliably project its performance. For this reason, Buffett did not suffer significant losses during the dot-com bubble burst of the early 2000s due to the fact that most technology plays were new and unproven, causing Buffett to avoid these stocks. In the financial measures silo, Buffett focuses on low-levered companies with high profit margins. But above all, he prizes the importance of the economic value-added (EVA) calculation, which estimates a company's profits after the shareholder's stake is removed from the equation. Berkshire Hathaway's investment strategy is a testament to the power of value investing and long-term thinking. It's a strategy that has stood the test of time and continues to deliver value to its shareholders. The future of Berkshire Hathaway is a topic of great interest to investors and financial analysts alike. Despite the recent changes in leadership, the company's strong fundamentals and robust portfolio suggest a promising future. Berkshire Hathaway's earnings are forecasted to decline at 32% per annum, while its annual revenue is expected to grow at 3.2% per year. This might seem concerning at first glance, but it's important to remember that Berkshire Hathaway is a diversified conglomerate with a broad portfolio of businesses. Some businesses may face challenges, but others could thrive, balancing out the overall performance. The two analysts offering 12-month price forecasts for Berkshire Hathaway Inc. have a median target of 405.10, with a high estimate of 410.00 and a low estimate of 400.20. The median estimate represents a plus 13.46% increase from the last price of 357.04. This suggests that analysts are optimistic about the company's stock performance in the near future. Moreover, UBS predicts that Berkshire Hathaway will outperform the market in a potential downturn this year. The conglomerate run by the legendary investor has outperformed the S&P 500 in the past 3 recessions. So far in 2023, the firm's Class B shares have underperformed the broader market. However, given its history of resilience and outperformance during economic downturns, Berkshire Hathaway could be well-positioned to weather potential market volatility. While Berkshire Hathaway is facing a period of transition and some challenges, the company's strong fundamentals, diverse portfolio, and robust leadership succession plan suggest a promising future. As always, investors should conduct their own thorough research before making investment decisions.